Commodities with in focus. Manisha, of course, is here. She's been, I think, on top of developments as far as oil prices are concerned. Manisha, we've spoken to a bunch of people this morning, and everyone kind of course, highlighting the fact that oil perhaps should have been up more. It's not, and that's telling.
Oh, yes, it is. And, when you look at the prices itself, we've seen after that knee-jerk reaction, prices come off a bit. We're trading at around 2% on the higher side after the U.S. attacked 3 nuclear sites in Iran. The knee-jerk reaction after the markets opened after a weekend, we did see prices gain up by 5.5%. We saw $81 a barrel. But from there, we've seen easing in sense of markets. And that is because there is no immediate response coming in from Iran after these attacks. Of course, there's a lot of rhetoric and a lot of statements coming in, but nothing on ground. And that's taken the prices off those highs. In any case, if you look at the crude oil prices, we've seen 10% of gains coming on this after Israel launched its attack on Iran a week ago. And 10% on the higher side is still holding. And this is even as there is no impact on oil supplies, no impact on oil exports, and no impact absolutely on Strait of Hormuz as well. So the Brent, as we see it right now, is looking at resistance of $80 a barrel. Interestingly, if there is an impact on ground, we have seen crude oil prices jump up quite strongly in those cases. 1979-80, remember when there was Iran revolution, we did see the crude oil prices triple at that point in time. Very recently in 2011, during the Libya revolution, we did see prices surge all the way from $93 to $130 on the higher side as well. So things do happen when things happen on ground, though. What is the worst case scenario that markets are talking about or looking at is if there is an impact on the production, especially coming in from Iran, which is producing at this point in time 3.3 million barrels per day. And apart from that, if you look at the prices itself, we've seen strong gains already come into the markets. As I said, the last 1 week has seen 8% of gains. In last 1 month, we are already up by 25%. And in this year now, we've turned in the positive. 2023 and 24 were negative years for crude oil prices, but 25 clearly in the positive right now. As I was saying, markets are looking at various scenarios on what really could go wrong. For example, Iran is producing 3.3 million barrels per day. It is exporting 1.84 million barrels per day. This was for the month of May. Any changes in this number, you will see the crude prices gain up. Apart from that, the closure of Strait of Hormuz is going to be a very, very important thing to watch out for. At this point, it's only about rhetoric. Nothing has been done. So you are looking at 20 million barrels per day or 20% of global oil flowing through this route even now. As per the maritime reports, around 100 to 120 ships sail through Strait of Hormuz every single day. And those reports continue to be around those numbers at this point. Iran has threatened U.S. bases in West Asia. If something happens there, you will see the crude prices go up. Apart from that, the regime change in Iran also could be a reason that you could see crude prices gaining. We have seen regime changes in major oil-producing countries do lead to crude prices being quite volatile as well. At this time, the spike in crude oil prices has led to a lot of hedging. It's been record hedging volumes that we've seen in the U.S. markets that has gained up by 25% in last 1 month itself. Well, we've seen crude oil prices at $60 this year. So when you're looking at prices at around 75 and between 80, you are looking at prices gaining there. It's interesting on what various banks and brokerages also have been saying. They also have not been major bulls into the market. Citi said that the prices could hit 78 if conflict disrupts 1.1 million barrels per day in sense of Iran exports there. Citi also says that a disruption of 3 million barrels per day within Iran production can take the prices to $90. We haven't seen that scenario emerge. JPMorgan says in an extreme case, you could see prices go up to 120, 130 as well. And that extreme would be Strait of Hormuz being closed. We haven't seen that happen. Goldman Sachs also says that the prices can surge quite strongly. They already see a premium of $10 per barrel in the prices. And an extreme case like a closure of Strait of Hormuz, they also believe that the prices can go to triple digit there. Barclays' view is $85 if the exports are cut. We also have statements coming in from Mizuho Group, which says that in case of a disruption is when you could see prices going up to $85. And there are similar statements also coming in from trading.com, BOFA as well, which believe that de-escalation can take the prices to 65, and if something happens, then up to 85. And that is the kind of range that many of these banks and brokerages at this point seem to be working with.
Okay, all right, got it. Thanks very much for that. So oil in very, very sharp focus.